Welcome to Investors Insights, episode 170. We've got a lot to talk about today, and please don't forget to connect with us on Facebook, LinkedIn, and Twitter. So we'd like to continue the discussion there. So let's get right to the topics that are important to today's investors.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Land Partners.
Guys, good morning.
Morning.
Greg is out today, so it's the three of us. We've got a lot to cover today, and last week we had started talking about what we're looking at in the second half of the year.
Right.
And so maybe some surprises, and we actually got a good surprise on Friday with the jobs report. And so the jobs report came out Friday, beat expectations handily. 287,000 jobs were created, and the thought was 170,000. So easily beat the expectations on that, which is very positive for our markets. And so now we turn our attention to earnings. And so earnings season kicks into gear. We could see some more surprises. And so, really expectations are so low like they were for the GDP and jobs that we could see some surprises. So we'll be taking advantage of some of the opportunities with the market momentum. So,
Right, definitely.
Trey, talk about more about earnings and the Fed.
I feel like the last few quarters we've said, okay, let's focus on earnings. The Fed's going to be on the sidelines. And then Janet Yellen doesn't like being on the sidelines. They rear their head and take back the front page news, and the markets would sell off. Hopefully, maybe the unintended consequences of the Brexit is that the Fed is forced to be on the sidelines. They're not because raising rates would have a huge impact on the euro strength, the pound strength, and so that seems to be forcing the Fed to stay on the sidelines. And maybe now we can actually focus on companies making money.
Good news is good news.
Exactly.
Finally.
We saw the jobs data come out Friday. Historically, the last few years, when good jobs happen, the market trades off. We saw good jobs. We saw the market rise. So maybe we could actually get some positive economic momentum go along with positive market momentum. We could actually see good news be good news and take advantage of that. We get earnings out, earnings coming out starting this week, and we'll just be watching those, see how positive momentum can go. We've had 3 straight quarters of negative earnings growth in the S&P 500. If that continues to a fourth quarter, or can we turn it around? That would be very interesting to watch. So we're at a really good crossroads right now, and a lot of data to watch closely. And hopefully it'll be actually economic data instead of Fed news cycle data.
Yeah. So hopefully the Fed is put to bed for a few months. So we can
hopefully
concentrate on the good stuff. So
right.
actually talk about trade and what's going on overseas.
Oh, sure, I'll be happy to. And this comes from a lot of questions that we've gotten from you on the Brexit vote. We had the shock value of the vote, as we've talked about, and we've gotten a lot of questions from clients.
Yeah, a lot of interest.
What now? And we appreciate you following that. We're delighted to share some information from you. And we got it straight from George Osborne, who's their Chancellor of the Exchequer in the UK. That's our equivalent of the U.S. Treasury Secretary. And what we told you on the vlog a couple of weeks ago is we thought that the British may try to take a negative and make it into a positive, and indeed that's what they're trying to do. He was quoted over the weekend as basically saying that for the first time in 40 years, they have an opportunity to reset their own trade agreements, and objective number one is to improve that with NAFTA more broadly in the United States specifically. And the point that he made was, he said, look, we've got $1 trillion with the U.S. in cross-investment. Wow. We're our biggest investor. He said we have a million UK citizens that work for American firms, same in the United States. And our Secretary of the Treasury, Jack Lew, is going to be in London this week to discuss just that. So they are obviously trying to move on and make a positive out of it. He also said, look, over the next couple of years, we're going to be moving goods across the Eurozone just like we have, and selling across the services across the Eurozone just like we have. Yeah. But it's very clear that they're looking at this as an opportunity with the U.S. primarily to improve their trade situation, which could be a positive.
It could be great for our markets, great for our companies. Start
absolutely.
Yeah. And so we've had so many headwinds this year, and hopefully now we can get some tailwinds, and we'll be taking advantage of those opportunities in your portfolio. So if you have any questions, please let us know. We love to hear from you. Thanks, and have a great week.